Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Friday, December 5th, 2014. Well, looking at today's economic calendar, you can see there were several key events on tap today, most of which occurred prior to the open of the U.S. trading session. At 7:30, we had the non-farm employment change data coming out, and it was surprisingly higher, with 320,000 new jobs being created versus an estimated increase of 231,000 new jobs. Then we had the trade balance data come out, which was a bit lower than expected at a negative 43.4 billion versus an estimate of a negative 41.3 billion. Then we had the unemployment rate released, and it came out in line with expectation at 5.8%. Average hourly earnings came up nicely higher at 0.4% over the prior month versus an estimated increase of 0.2%. And then at 9 o'clock, we had factory order data release, which came in lower than expected, down 0.7 of a point versus an even estimate at 0.0%. Now, as far as today's pre-market sentiment was concerned, things were fairly positive coming into the open. Now, the Asian markets had closed mostly higher in volatile trading, and shares were ranging between sharp gains and losses, largely due to the speculation around the China stimulus programs and ahead of the U.S. jobs data. The best performing markets in Asia were in China, where the Shanghai market closed up 1.4% and the Hong Kong market was up 0.7 of a point, all at new three-year highs as the banking sector continues to drive those markets higher. We also saw that the Japanese Nikkei closed up 0.2 of a point as the yen reached fresh new 7-year lows against the U.S. dollar, and we saw that Australia was the worst performing market. It was the only laggard actually in Asia. It closed down 0.6 of a point on a slip in the mining sector, largely due to lower crude oil and commodity metal pricing. As far as the European markets are concerned, they were open and trending higher ahead of the U.S. jobs data. Now, investors were cautiously optimistic ahead of the U.S. jobs report and on Draghi's comments yesterday, in particular after the European Central Bank advised late Thursday that it will in fact be looking to launch additional quantitative easing measures in early 2015. But these gains were capped somewhat by losses in the energy and mining sectors on falling oil and metals prices. As far as the United States is concerned, Wall Street did figure to open up higher after the release of the upbeat economic reports. Now, the futures were pointing up coming to the open following the global markets higher and after the positive employment data was released. Sentiment was also bolstered by hopes that the European Central Bank will in fact follow through with its reported quantitative easing measures in early 2015. For many U.S. investors, focus would now be on the factory orders, FOMC member Fisher speech, and on consumer credit data due out later on in the day. Now, as far as our trading activity is concerned, we attempted 9 entries in the market, so pretty busy from that perspective, but unfortunately we're only filled on one of those entries in the E-mini Dow market. But before I talk to you about that trade in any detail, I do need to share with you these following important disclaimer. And that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Now, turning to the charts here, let's begin here with the E-mini S&P 500. And in this market alone this morning, we had 4 attempts. Things got started right here at the open. You can see that we had 2 bars moving lower, 1 bar retracing, and I was hoping that the second bar was going to retrace and give me a short entry at 20.74 but it never made it to my entry point, and I had to take this trade out of the market. Then you can see after the open, we had 2 bars moving higher, 1 bar moving lower, and a second bar moving lower, and I was all ready to go long at 20.71.5. But what happened here is that this market opened up here, moved 1 tick in my direction, so I was 1 tick away from a fill, and then it moved through my profit target. When it did that, I took that trade off, and you can see the market ultimately came down, would have filled me and knocked me out with a loss, so I'm glad I took that trade out. Now, staying with the E-mini S&P, 1, 2, 3 bars moving lower, 1 bar retracing, second bar retracing, and I was looking for a short scalping entry here at 20.74 3/4. The same thing is what happened here. This bar opened up, came 1 tick within giving me a fill, and then moved through my profit target, and when that happened, I took this entry out of the market. And then here towards the end of the trading session, 1, 2 bars moving lower, 2 bars retracing, the same thing here. This bar opened up, came within 1 tick of my fill, moved through my profit target, and I had to take that trade off. So very, very close to 3 nice entries here in the markets, but unfortunately I didn't get my fills. Let's now turn our attention to the gold market. So looking at gold, we can see here shortly after the open that we had 1, 2, 3 bars moving lower, 1 bar retracing, and I was hoping this bar right here was going to retrace and give me a 2-bar pullback entry short at 1197.4. But you can see the market only really took a 1-tick move in my direction before falling away, and I had to take that trade out. That brought me to the E-mini Dow market, and looking at this market, this is where we had our 1 fill. But right here at the beginning, at the open of the trading session, we had 1, 2 bars moving higher, followed by 1 bar retracing and a second bar. I was hoping this was going to retrace and give me a 2-bar pullback entry long at 17,901. The market never really came close to my entry, and I had to pull this trade off. But then you can see that we had 1, 2 bars moving higher plus 2 bars pulling back, and this gave me a long entry here at 17,908. So I got my fill here at 17,908. I had an 8-tick stop loss and an 8-tick profit target. So what happened on this trade is I got my fill. The market moved maybe a couple of ticks in my direction and then moved sharply against me. Moved about 6 ticks against me, moved a little bit back towards break even, back 6 ticks against me. And when I saw this kind of movement, I decided, ooh, this market's not really doing what I expect it to, so I'm just going to go ahead and move my profit target down here to my entry point and see if I can get out with a scratch trade. Well, as prices started to move up to my entry point, I also tightened up my stop loss just a little bit, went from 8 ticks to 6 ticks, and then of course the market came back down here, knocked me out for a 6-tick loss before ultimately moving fully against me. So this trade didn't work out. It cost me 6 ticks or $30 per contract traded, and that's really where I ended the trading day today, folks. We had 9 attempts in the market and just this 1 fill. My plan was to come back and take a look at things after lunch, but it was kind of interesting. I was watching the crude oil market on my point and figure charts. And we had established early on in the trading session that we had a minor area of resistance here at 65.96, just below $66 a barrel. And I saw prices kind of moving up into this area, so I decided to place a short order here at 65.96, risking 10 ticks to make 5 ticks on this quick little scalping trade. Well, you can see prices came up. I got filled almost to the tick, and then the market turned around nicely and gave me a 5-tick win, which gave me $50 per contract traded. I also want to point out that when the market did move 5 ticks in my direction, my stop loss did move automatically to break even. In the event I didn't get my fill here, just to prevent this market from moving against me and costing me any money. So I was up $50 here. Now, staying with the market, we noticed that prices broke through the $66 a barrel level and started moving around, and it came up here to 66.14 and sort of fell away from this area, and then, continued to move up and down and undulate around this. And so this ended up actually being a little bit of an area of resistance. Then prices moved above this level, which I kind of felt they would do. When prices went above 66, I thought they would push much higher. So we had this column of X's going up, O's down, X's up, O's going down. And so when we tagged the 66.14 level here, and then prices moved away, I felt that if it came down and tested this level again, that this would be a nice area to look for a long entry. So I was sitting here long at 66.14. I got my fill. The market moved about 3 ticks against me and then turned right around in my direction and gave me my 5-tick move, which was another $50 per contract traded. Also, when the market moved 5 ticks in my direction, my stop loss did move to break even, so the worst thing that could happen to me if I wasn't filled here is that this would be a scratch trade. But the net effect here is I had 2 fills here, and it picked up a total of 10 ticks or $100. If you take away the $30 I lost earlier, I closed the trading day up $70. Looking forward to a nice weekend and for what opportunities might present themselves next week. Well, looking at next week's economic calendar, you can see that we have kind of an interesting week with activities scheduled on each day. The first day here on Monday, we have at 9 o'clock labor market conditions report coming out, and then at 11:30 we have FOMC member Lockhart speaking, and also in the background we have all-day Eurogroup meetings in Brussels. Then on Tuesday at 9 o'clock we have the JOLTS job openings report, and we have all-day ECOFIN meetings in Brussels. ECOFIN, this would be the meeting of the European finance ministers, and they meet once a month. Then on Wednesday, we have crude oil inventories. We have a 10-year note auction and the release of the federal budget balance. Then on Thursday, you can see things start to pick up. We have core retail sales, unemployment claims, import prices, business inventories, natural gas storage, and the release of the 30-year bond auction results. We conclude the week on Friday with producer price index, core producer price index, and the University of Michigan consumer sentiment. So on each and every one of the days that we're trading, it looks like there's a key event that has the potential to move the markets, and hopefully that'll give us some nice opportunities to trade next week. And so with that, folks, thank you so much for watching today's daily video. I wish you a pleasant evening, a wonderful weekend. I look forward to speaking to you on Monday. Take care and good night.